Hello viewers, welcome back to the daily analysis of Nifty. In this show, we analyze Nifty using the price action, trend lines, support and resistance points or zones, and Fibonacci retracements. So to start with, in the yesterday's analysis, I mentioned that going by the price action, the downtrend seems to have resumed, and there is some support still playing out. I mentioned a few support points and the resistance points also. And after writing down the support and resistance points, I went through various trades that can be taken depending on how Nifty is going to open today. So let us see how what Nifty has done during the session today. So Nifty has opened at 17,924, and in the yesterday's analysis I have mentioned that if Nifty opens between 17,907 and 17,930, don't initiate any long positions until 18,000 level is consistently broken and sustained. So I also have mentioned that if 17,900 is taken down early, sell calls or initiate long short positions using buy puts with 17,960 as stop loss, or otherwise wait for the price to get near the resistance point, so that is 17,960 or 18,000, and then add short positions. So, so let us see what Nifty has done during the intraday. We will observe the price action. So, going down, drilling down to the 15-minute level. Today, Nifty opened up at 17,924, and within the first 15 minutes itself, it broke down the 17,900 support, and it went up to 17,825, where it took some strong support and rebounded and tested the resistance zone at 17,960. So the resistance was between 17,960 to 17,970. So it tested the resistance, and it again, because the resistance there was strong enough, it fell down, and it actually got good amount of support around 17,850. So it kept hitting 17,860, 870 levels, and every time it rebounded up. And then every time it rebounded up, it faced resistance around 17,930. In the yesterday's analysis, I have mentioned that the resistance levels would be 17,960 and 18,000. So it didn't test the 18,000 level, but 17,960 played out as a strong resistance. And we also can observe that 17,930 is also a resistance here. So multiple times, uh, on during the session of 10th also 17,930 has played as a resistance here. So as can be seen, here it played as a resistance. Here it played as a resistance, pushing down the price. And even today, at this point, like around 12 o'clock and about 130, 115 in the afternoon, 17,930 acted as a resistance, pushing the price down. So 17,930, 17,960 are strong resistance levels. So going by the price action during the session today, we can see that price is largely range bound. So between 17,930 to 18,000, 17,850. So price was range bound, and there was strong support below 17,850 and strong resistance above 17,930. So that can also be visible. That's also visible from the daily time scale. So in the daily time scale, the candle is a spinning top with almost decent size, equal size wicks above and bottom. And we also have to note that the price closed below the previous close, and it actually it broke down the low of previous session and made a new low. So all this indicates that the the bearishness in Nifty is not over yet. So in this analysis, I keep this simple. I'm not going to analyze based on any news or any other foreign index activity or anything like that. We look at the previous price action. We look at the support levels, resistance levels, trend lines, and analyze purely based on what Nifty is doing here. So, looking at this particular candle and the price action, the bearish trend is still intact, and right now the price is range bound, finding some strong support at lower levels and also resistance at higher levels. So, one more thing we can notice here is looking at the trend line. So, this particular trend line has long acted as a rising support line. Now it became a rising resistance line. So, as it can be seen, price went up and tested this trend line and fell down. Also, the price has closed, it managed to close below 100 EMA here. So, this is 100 EMA, this green line. So, price closed below that, and it is testing this particular resistance zone which I mentioned yesterday, the zone between 17,800 and 17,700. So this is a resistance zone. So anywhere here Nifty can find support and either rebound up a little or otherwise keep on trading in a range bound fashion until either the resistance is strong enough to break the support or the support is strong enough to push the resistance and break above. So also looking at the today's candle, we have to note that the price right now is a little biased towards bearishness, but still it's finding good support at the bottom. So until either that support breaks or the support becomes strong enough to break the resistance above, we have to play this a little cautiously. So, and let us look at what Fibonacci retracements are telling us. So, observing the long-term Fibonacci retracements from the all-time high, price is testing this particular support at 17,820 levels. So that is where exactly Nifty found support today. So for any further down move to happen, this particular support level has to be broken. And if you look at the Fibonacci retracement at some other in on some other leg, this particular observation can be reinforced. So let us look at this Fibonacci retracement from the lows of December. So here Nifty has retraced up to 38% and then it is falling down, but has not broken the low, that is 17,800 level. So as I have been mentioning in the previous analysis, this 17,800 level until it is holding up well, Nifty can find support and can play either sideways consolidating or can there can be a little rebounds happening. So once this particular level 17,800 is broken down conclusively, we can actually double down on the short positions and can look forward for further down move. So let us also take a little drill down look at 1 hour time scale. So on 1 hour time scale, retracing from the lows of 6th Jan, Nifty went up to 78%. and then it started falling. Yesterday it closed above the 23% retracement line, that is 17,900. But today, even though the price was range, it managed to close below. So tomorrow's opening and how Nifty is going to play, one has to observe, because right now at this point, even though price has closed below, tomorrow the price can either open a little above 17,900, and if the resistance, as it has played out today, if it's strong enough, then it can be pushed down, and then it can fall below this particular range. And if it breaks the range and again comes to testing the 17,800 levels, one has to, again we have to see what happens there. Suppose if Nifty again finds support here and rebounds slightly above, and again it again closes here, then one has to we have to assume that Nifty is still in a consolidation zone. But if this particular support at around 17,800, 17,820 is broken conclusively, and the and Nifty, if it actually closes below this level, then we can firmly believe that more downside can be expected. Okay, so based on these observations, let us write down these observations, and based on these observations, let us see what kind of trades we can take during the tomorrow session. So the candle, today's candle is a spinning top with strong resistance and above and support below. And given the way it has closed, the bias is still in favor of bears. The trend is down on daily basis. VIX has it rose sharply during the intraday session, and it finally fell a little lower, about 0.5% lower than the previous close. And the supports and resistances which I have mentioned in the previous analysis are still intact. So since the supports and resistance are both intact, until either of these breaks conclusively, price may play in between. Suppose if a 17,800 is broken down conclusively, then price can go down. If 18,000 is broken above conclusively, then price can go up. So once a direction is established, we can add more trades in that direction confidently. So until then, what kind of trades can we take? So if Nifty is going to open tomorrow, that is on 12th Jan, between 17,900 and 18,000, initiate long positions only if 18,000 level is broken above and sustained. Otherwise, choose either 18K level or 17,960 as a stop loss and initiate long short positions, and wait until 17,800 or somewhere near there, Nifty finds a support, and then book profits there. If 17,700 level is broken, or at least 17,770 has to be broken and Nifty has to close below, then add more short positions, or either reopen those positions on which you have booked the profits. If Nifty opens between 17,800 and 17,900, then don't initiate any long positions. Wait for some clear price action. See if either Nifty goes to test any resistance above 17,900, in which case initiate short positions closer to the resistance level and wait till Nifty finds a support around 17,800. And if 17,800 is broken down conclusively, then reopen positions. If Nifty gaps down below 17,800, which has been playing as a strong support all this while, then sell calls or buy puts with 17,900 as stop loss. But if a gap down happens, one has to note that the VIX will be high and premiums for puts also will be high. So play it a little cautiously. Wait and see if there would be a consolidation around the opening of the day, in which case VIX may fall, and it's better to wait for the premiums also to fall, to settle down slightly, and then buy puts. In any case, if 17,800 is broken down with a gap down, then it is a clear sign that the support is taken down. Okay, and if 18,000, if Nifty opens over 18,000 with a gap up, then again it can be noted that the resistance has been broken above, and we can initiate long positions as long if 18K level is sustained. But if Nifty opens above 18,000 and then if it comes down crashing, don't initiate any long positions. Uh, in that case, initiate short positions with 18K as the stop loss and wait for a target of 17,900 or 17,800. So that's it, folks. So we analyzed the Nifty based on the price action, trend lines, and the Fibonacci retracements. So depending on how Nifty is going to open, and depending on your risk management, play it well. I hope in whichever direction you play, or whichever strategy you choose, you make good profits. So keep your capital safe. We will see you again in another in the analysis of tomorrow. See you.